Hello, 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 everybody. Hope everybody's having a great evening. We're going to get started. And let me pick my screen to share. We're going to jump right into it. We're going to jump right into it. All right, let's get rid of that. Okay. Again, good evening, everybody. Oh, let me turn my camera on. My name is Greg Whitmire, and I'm your host for these next couple of minutes. And if you haven't been on a session with me before, welcome and nice to meet all of you all for recognize certainly a couple names, but for folks, like I said, just jumping on, appreciate you getting on. The topic or the general topic of discussion is that of smart money, institutional trading. We're going to jump right into why we trade like that, or why and actually, let me clarify. When you hear institutional trading or trading like the banks, there is a style associated with it, if you want to call it such, or a strategy, whatever you want to call it. But mostly for me, it's a mindset. And I'm going to have to mute folks. Don't get mad, us Rose up. I had to just mute some folks just to kind of get the handle the background noise. So if you could police yourself, that'd be great. But let's talk about something. Let's talk about that mindset. That's where I always like to get started. I'm gonna share my screen with a picture that hopefully says it better than I can. Okay. So like I said, institutional trade like the banks. This is an important concept. One that will help you in any style of trading that you wind up gravitating toward. I'm not suggesting that anybody trade any particular way. I do suggest that you learn how to trade with the, using the academy. I'm sorry, I got to hunt down somebody. I do suggest that you find an educator on the IML platform, somebody that fits your availability. That's a big thing, given that all of us are so busy, and there are over 100 educators there. And so the challenge lots of times is just finding a time slot or group of time slots that match up with your availability. But there's no substitute for those men and women, those professional traders on IML Academy. Everything that I know about trading today, and again, I've been trading now for more than a year now, and everything that I know about trading comes from those men and women on that platform. And everybody has their own way of learning, and they're drawn to different information in different ways. But I'm one of those people that just really put a blinders on. Block out the extra noise, and it's worked for me. Let me just make long story short. So, anyways, this picture here, this is what we're up against. And I always like to start here because this is very, very important for people to realize. And if I apologize if you've been on this session before, you've heard it 20 times, but it's worth repeating, especially for those who haven't heard it before. But you need to know who you're up against, who you're playing with in this game. And again, the foreign exchange and digital currency markets are not set up for us to make money. This is again, as you all know, it's a $6.6 trillion a day market. And most of us are just hearing about it, So that tells you something, and and I'm sure everybody has at least gone through 12 years of standard education, and then some of us have gone through more than that, and some of us are well beyond the age of 30s and 40s and such, and this is the first time that any of us have heard of that. So there's a reason for that, and again, it's not designed for us to make money. It's certainly a vehicle for which we can learn how to make money, but I just say that to say that the players in this market, and just go right back to your IM Academy 101 series, and it talks about the market participants. Who are they? They're the big hedge funds. They're the the big institutions, the big banks. That's who runs the market. When you fund your account, and I'm not trying to minimize it, but when you fund your $200 account, you fund your $1,000 account, you fund your $5,000 account, and then you use your lot size that's in proportion to your account size. Trust me, those lot sizes that we're doing, albeit it's everything to us because we're putting our money in the market, but in the scheme of things, in the larger scheme of things, those amounts of money are just less than a drop in the bucket. They do not move the market. What moves the market, what moves those candles, are the million-dollar transactions that take place in the market. Those are the sharks. Those are those hedge funds, big banks. They're the ones that's again making those $1 million, sometimes billion-dollar transactions that move the market. We're just trying to position ourselves to be able to understand the direction that the market is going for a prescribed period of time, and then be able to profit from that. So when I look at this picture,
you want to go and get out so you can start warming up.
When we look at this picture and we see the sharks, like I said, that's just representation of those big, large institutional hedge funds. And then you see what's swimming alongside the sharks. That's us. That should be us. That's the institutional traders. That's the traders with the mindset that understand that I can't get in front of this shark because I'm gonna get eaten. I need to position myself to the left or the right of these sharks, because when I just want to make the same moves that the shark makes. When the shark goes left, I want to train myself to go left. When the shark goes right, I want to train myself to go right. Ultimately, when the shark eats, I want to be right there with them to be able to eat. Now, I'm not going to get the big chunks that the shark gets, but I don't need it. Remember, I'm a little fish, but I just need to get the portion, a proportionate amount of food in relation to my account, in relation to my stomach, what's going to feed me, and not be greedy, and then continue, the next day. So as the shark is done eating, boom, we're swimming some more. We're looking for our next meal. So again, that's the mindset that's helpful to take on when you, again, looking at institutional trading or trading like the bank. All right, that's a lot, but I think it's helpful just with any type of trading that you're doing, any particular style. There's a couple other concepts that I usually try to talk about, and shucks, it's not cooperating with me now here for some reason. But anyways, along the lines of mindset, real quick, the other thing that I always like to talk about is three other things, really, and I'll just talk about them. The slides are evading me right now. No, I can get them right here. There we go. All right. To trade, you need to be able to master yourself, basically, because trading itself is easy. Once you learn, and again, it's a repetitive act. We do the same thing over and over and over, and once you get that repetition down, again, the intellectual part of trading becomes easy. What wasn't so easy for me, again, was those what I kind of refer to as soft skills in the area of, like, for instance, what's up here now, discipline. I've had to grow so much in this area of discipline. And discipline, in the next two slides that I'm going to talk about, are areas or characteristics, I guess you call them, in our life that we have a chance to practice again and again and again. And many of us have been able to apply discipline in different areas of our life. We're parents, we're students, we're husbands and wives, we're employees, employers, all that kind of stuff. And in order to advance in any of those areas has required us to apply some discipline. Albeit it's not perfect discipline, but nonetheless, it still requires some discipline if we're going to have some success in that area. And the same thing pertains to trading. Trading requires a tremendous amount of discipline, and I'll explain a little bit more about that later. Also involved here is this quality or characteristic of faith. And again, we're all adults. We've been, their faith shows itself in many different, or means, many different things to many different people. There's religious faith, there's blind faith, on and on and on. But, right here, what I'm talking about is really just, trusting your skill set. And again, along this journey, you'll develop a skill set or continue to build on your skill set. And then you have to kind of put yourself in position to just trust it and not fear the counter outcomes, which sometimes when we have to put ourselves in a situation and the outcomes aren't exactly what we want, and the fear sets in and causes doubt. It challenges our faith in ourselves, and then we really oftentimes just speed up that which we didn't want to happen. We kind of set that process in motion just by not having adequate faith in ourselves. And then the last area I just want to touch on is that of patience. And there's a cliche, and I think it's a very accurate cliche as it pertains to trading, and that is patience pays. And I've seen that time and time again and again, what you hear me talk about is, what's been my experience. Like, I don't try to project out onto other people's. I challenge you to develop and pay attention to your own experiences as you go through this journal and such. But that's another topic. But anyways, in the area of patience, I know that, again, I would consider myself, well, up until the point that I was trading, I would consider myself to have been a very, very patient person. But again, this is new to me. And again, this was the first thing that I had been involved in that could potentially, I'll just look and see who I might need to mute there. If you guys, please make sure you mute your phone. We hear the lovely voice of some young child in the background, but I don't see anybody that's not muted. So if you could just take care of that on your own, I greatly appreciate it. Thank you very much. So in the area of patience, I just had to be patient. Yeah, see there, I just had to exercise some patience. We constantly have opportunities to exercise patience, and sometimes it's at a subconscious level, just like right then, you didn't freak out, just had to be patient. Hopefully, the person with the parent or whomever was looking over that wonderful young child would find that they need to mute their phone, and that's patience. As it relates to trading, patience is going to, you're going to be challenged in the area of patience, because there's going to be trades that you're participating in that just don't complete as soon as you want, or you're going to see things in the market or think you see things in the market that don't look like they're in your favor. But and when you exercise lack of patience, you could also a lot of times get out of the trade too early. Or here's the other side of patience. I mean, the bigger issue with patience is that trying to, again, just swing for the fences every time and putting yourself in precarious situations from a leveraging standpoint, not wanting to exercise the patience of compound growing your account in a systematic compound growth manner, and then just thinking that you're going to, put, $1 on US 30 and jump out there with a $30,000 day. Could happen. It's probably happened to some, but it won't happen to most. So again, patience pays. Okay, so let's get out of that, and I just want to jump into into what I wanted to talk about tonight. And I'm just hopping on my next screen to share. Okay, here we go. Okay, let's see. Okay, you guys can see this. All right. The topic for tonight actually was like I just wanted to talk a little bit about the DXY, the US dollar currency index, okay? And why that's important. And this is something that I encourage each of you all to take some time to study for yourself, or at least inform yourself about the US dollar and its impact on other currencies, and why it's important to pay attention to the strength of the US dollar in relation to other things that your other trades that you're involved in. And before I get into that, hopefully, well, I shouldn't say hopefully, but I know different people have different reasons for getting involved in this. And one of the really, really strong selling points or really good things about being a part of the IML Academy and this particular team in specifically is that we have the opportunity we're fed trade ideas along the way. The signal group, that's next millionaire. There's another one, I just can't call the name of it, but there's plenty of opportunities for us to, receive signals, as they're called, and put in trade ideas. And that's fine, because again, that's how we learn, that's how we earn as we learn. But I really, really want to emphasize and encourage everybody to, put your focus on the learning aspect of it. I know everybody, well, I don't know, but, I know in some instances there's a financial need that, supersedes your, everything else. I get it. But if your circumstances allow, or you can kind of create that balance, again, it's so important to chase the knowledge. It's so important to get some understanding about what you're doing. Even if you're, like I said, just putting in trade ideas, it's just the value of being able to then come into the chart and see exactly what you've set up or what should take place will help you manage your trades better, help you make better decisions about the type of trading that you want to get involved in, and and help you to become a more profitable and consistent trader. Again, that ties back to why I think it's really important to get with the educators, because they set you on a specific path for being able to do that. Okay, but I get off topic a little bit. U.S. dollar currency index. All right, and I bring it up because I know there's a lot of gold traded in the signals group, the Gold Cup, and those men and women are just excellent traders, and I would love to be half as good as them. And the currency pairs, two of the currency pairs that I follow have a direct correlation to the U.S. dollar currency index, and that's significant because actually, well, all of them don't. All the U.S. pairs don't have a direct correlation, but when you can, I start my day with analyzing the U.S. dollar currency index, and here's why. Let's just go to it. So let's just look at the DXY. And with number 45 in office and all of what's been happening with the pandemic, the value of the U.S. dollar has really been on the decline for a significant amount of time. And what that's significant in that this helps me. This serves as a point of confirmation for how I'm going to trade against other pairs. Now, you don't trade the DXY, but again, it's one of those indexes that you just use to understand, okay, well, if the DXY is going down, if the DXY is bearish, and it really has been for a significant period of time, then what's the impact, or what's the connection then? What's the correlation to then other pairs? So I watch this every day. And actually, you know what? Let me take a step back. In TradingView, on the lead page in TradingView, and again, if you haven't discovered this, please take the time to take a few minutes to study this, or just inform yourself a little bit more about in TradingView on the lead page. We'll go back to DXY in a second. But on the lead page on the DXY, you'll see whatever pair that you pull up, of course, you type it in here and then it pulls up this information underneath. Typically, we just quickly go to full feature chart and it pulls up the chart. But I'd like to, share with you all, if you haven't noticed already or take advantage of, it's a bunch of information that's on this lead page in TradingView that can help you understand about that particular pair, some history about that particular pair. In this instance, there's a profile on the U.S. dollar. It just reads the U.S. dollar index tracks the strength of the dollar against a basket of major currencies. And then it lists those, the following 6 currencies are used to calculate the index. So the U.S. dollar index is made up of, based on calculations of these 6 currencies below. And why is that important? Because again, it kind of puts you in a real good position to be able to make decisions about, for instance, euro. I trade a lot of euro, and I trade the British pound and Swiss and the Swiss franc. So I concentrate. Actually, I don't do much with the yen and CAD too. I do CAD dollar. But anyways, it gives me an idea about, I like a leg up oftentimes with respect to trade ideas associated with it. But anyways, so you have this section here, we have the profile on a particular pair. And then I'm not suggesting you pay too much attention to this, but be aware of it, that there are actually trade ideas that are also shared in this section. I've never traded any of these, but it's good. Sometimes I guess it's kind of just good. Sometimes good, sometimes not so good, sometimes a little confusing, but just to see what other people in the world are thinking about in the way of trade ideas that I might be involved in, or just to kind of see if there's some confluence around the world from other traders about, hey, I'm thinking that the DXY is going to continue to drop. What do other people think? Okay, yeah, I see it's a bunch of traders over here that think actually that there's going to be a bullish move on the DXY. That's interesting, So I might go back and further sharpen my analysis, or and not to say that they're right and I'm wrong, But again, just kind of have an opportunity to take on viewpoints of people. And I don't know these people. My assumption, it might be an inaccurate assumption, but my assumption is that these people have the experience that I might be lacking. So anyways, it's just good information. It's good supplemental information. There's all kind of information over here. There's headlines on the DXY, et cetera, et cetera, et cetera. So again, I just encourage everybody to pay attention to this section. And again, it's not just on the DXY. If you can just say EUR, GBP, I just picked that out of the blue. There's information on this landing page specific to, and again, it's some information. You got to keep yourself informed, okay? So again, just scroll down a little bit, and then it gives you this little profile. It's just tremendous. And again, it might not make a lot of sense, especially if you're a new trader right now, but trust me, as you can continue to build on your education and start being able to, pull together all these different resources in conjunction with working with those top educators on the IML Academy site, this information will do nothing but make you a stronger trader. But anyways, to the DXY. So again, we were talking about the DXY, and again, why I usually start my day with looking at the DXY in relation to other trades, and I'm gonna get in. I trade the EUR USD almost on a constantly trade on this pair between this and GBP USD and some CAD, but primarily those two pairs, GBP USD and EUR USD, I trade these constantly. I was told to marry a pair. I guess, by default, I just kind of married those two pairs I just mentioned, and it helps that I have an understanding of the DXY. And let me show you, I know I'm talking kind of around the point here, but what I want to show with the what the DXY affords me is if the DXY, the US dollar currency index, is on the decline, the two pairs that I'm most interested in are going to be on the incline. They have just opposite correlations to one another. So in one sense, it makes my job so easy in terms of making trade ideas. I mean, yes and no, because I do not know which way the market is going, but I do know which way the market is trending. So in this instance, and let me just clear my indicators here. Let's get, where is it? We need to have a session on divergence. If you understand and learn divergence, that's another just crazy money-making tool. Where is that at? Oh, McGinley. Okay, I just had that. Okay, so I'm on the monthly right now, and again, I usually just kind of started the monthly just to get a sense as to, again, trend. I gotta establish the trend in the market, and each one of these candles represents 1 month of price action in the market. So if we look at this, we can clearly see over the last several months that the dollar index has been on a decline. And this probably goes, oh shucks. If you look at where this goes back into March of 20. And of course, that's, getting around the height of the pandemic. Of course, the pandemic hit in and around February. But again, our sharpest decline on the US dollar as of late started around that same time, the pandemic. So what do I start doing? Okay, I start the correlation between the US dollar and, like I said, the other pair that I'm a trade. We'll see in a second. We just look at the monthly on the for that same period of time. We were like about March. We can see, I'm looking at I'm on the monthly, and we can see that market has been trending up for about that same period of time. Let me grab my little trend line. That's March of 20. Oops, it's a straight line. Let's get rid of that. March of 20 is right here, and we can see it's just doing the opposite. So, like I said, this is like just kind of surface stuff, but generally speaking, it's I hate to say easy. I'm serious. I respect this market so much, and it has the ability to just as quickly as I can come in here and decide how much money I need to make in a specific day, it can also, you know, turn around and if I'm not humbled, if I don't respect this skill set, if I don't respect this market, it can also turn around and, you know, have the opposite effect, undesired effect of you know, taking my money as well. So I'm real careful when I say easy, but with those two, we just demonstrated, of course, when one goes up, the other goes down. Now, like I said, I'm looking at the monthly. So when you come down into the lower time frames, you see all the other little price action that's taking place that makes up that month of chart. I mean, makes up that month of candles. Remember, when we're on the monthly, one candle represents price action. When we come down here to the 4 hour and the 1 hour, you know, those then, you know, shucks. This is, that's the end of July right there. So again, going all the way back, just, you know, back. So again, it's a whole bunch of candles that make up. So again, it's not as easy of a decision to say, oh, okay, yeah, it's going to go up, it's going to go down, this, that, and the other. It's going to do a whole lot of both of those in the course of a given trading period. But I can still take that information from the monthly and down to the daily, down to the 4 hour, down to the 1 hour, and start understanding where my entry points are for this particular pair. And the same thing with GBP USD. And the exact same thing happens with GBP USD. As again, it's a for the most part a reverse correlation between those pairs and the US dollar. US dollar goes down, GBP USD goes up. Dollar goes up, GBP USD is going to go down. Now, there is an expectation that, and let me just throw this in. That's also why, and again, like when I started out, I was talking about how it's important to look at and seek out that extraneous information, like what we see here. It may just look like, oh God, I got to look at that. Yep. And that's also why you look at other things like news, which are like Forex Factory for your news, and also start looking at like currency strength meters, so you can start seeing. I just refresh that, but we can just kind of see the U.S. dollar, the strength of the U.S. dollar in relation to the British pound, the strength of the U.S. dollar in relation to the euro, in relation to the cash stuff, you know. So, and then when you start looking and understand, so you're basically establishing correlations. So I look over here, I see, well, for the most part, the DXY again has been, let's look at it from over actually a much shorter period of time, because we can see where the DXY has started some sort of a rally, a little short rally, and then at the close of today, it still is, you know, still a bearish market. But the analysis, I guess there are predictions, I guess is the right word, that, you know, that we are going to hit into this equal low here, this EQL, equal low, and then the dollar is going to start to rebound. So that's what I'm kind of looking to start to happen into next week. We saw a little bit of it today, but you know, we'll just kind of keep an eye on it into next week. But along with that, and that's what trading is about, just because we don't know what's going to happen. Nobody knows what's going to happen. So you just try to set up as many confirmations as you can for yourself in order to get a gauge as to whether or not, you know, what direction you're going to trade at any particular time. And like I said, I know I'm repeating myself, but this, again, we do the same thing over and over and over again. So I had no choice but to say the same thing over and over and over again. So we identify which direction the trend is going, and then we come down the time frames and then start looking for entries. It's, you know, that's a trader's life. You're looking for where you can get in the chart. And again, it's real simple concept that I think a lot of you can possibly lose track of if, you know, again, if you're not disciplined. But, you know, real simple, not real simple, but you want to buy at a low, you want to sell at a high. Trading don't get any simpler than that. That's basically what you have to do. And again, basically what you want to do. Now, again, the challenge can be sometimes, okay, well, you know, how do I find the high? How do I find the low? Okay. That is, let's move my beginning. I'm gonna give you a quick example here in this market right here, just in this little segment here. We're looking at the 1 hour chart. If I were, and I again, this is what I do, or you know, I get in a trade down on this. I'm looking for these what they call points of interest in the market or institutional candles, and that basically is like the last candle before the market transition, before the market transitions in the opposite direction. I'm trying to highlight that. That might be too green, but you get it. That's the last sell to buy candle. That's the last sell candle before the market took a bullish direction to the high. So what am I looking for? I'm looking to be able to identify, okay, if the market is going to get down to that area, that's where I want to get in. Now, how do I know that it's going to get down there? All I do, I keep looking left. Okay, that's where price came from. So guess what? Price is going to come back to this area, and when it does, I'm just sitting here waiting. Just sitting here waiting. And like I said, I don't know exactly where it's going to come, but I know it's going to come to this area. It has to come back to this area because, and I'm kind of keeping this to kind of a high level. There's a lot of a few more details associated with this, but keeping it at a high level, I know it's going to come back to this area because, again, market has to, you know, maintain a balance. So I know the market's going to come up, swing back down, and like I said in the beginning, at this segment of the market, I know based on my understanding of the DXY. Remember, we said the DXY had been is bearish. It's been going down. So my market, my trades, I'm buying. I'm looking for buying opportunities on the EUR USD. So again, I don't chase price. I wait for price to come to me. So price just comes into this zone. All I need is price to come into a particular zone. I go to use my fibs. And when price comes into the 88, and actually it pressed down a little further than the 88, my 88, oh, actually, no, here we go. Yep. So I just wait for price to come right down here to my sweet spot, my desired location, which is the 88 fib. And then boom, I'm gonna take it up. And I'm gonna do that all day. I'm gonna do that all day, every day. And again, that's where the patience and the discipline part comes in. Because guess what I had to wait through? Guess what I had to wait through? I had to wait through all of Mr. Smooth Fib. I had to wait for the market to come back to an area that I wanted to purchase at, that I wanted to buy at. Okay, I could have been tempted anywhere especially on this side as the market was going up from this area. You know, again, here's where remember I said when you get out in front of the shark. Here's where you get out in front of the shark when you jump in the market somewhere over here, and then what does it do? It just turns on you and then comes back down by design. And again, you understand some elements of institutional trading or reversal patterns in the market. You start to understand these little fake out moves. So, and again, you could catch some pips over here, depending on what your pip targets are. You very well, and depending on where you got in. But again, most retail traders, they're still buying up here. Okay, they're still buying up here, and then it get caught, and then boom, the market then takes a bearish direction, and then not many people are going to survive that drawdown, because that's probably about 100 pips from that high point up there. I can almost guarantee you that's probably about 100 pips. Yeah, that's almost 200 pips. Yeah, so not many people are going to survive that level of a drawdown. So what do? You have to be patient. You have to be disciplined. You have to just know for yourself that when price comes to me, it's like going into a shoe store if you buy shoes, and you already have in your mind that I'm not going to buy those shoes when they're $200. I'm going to sit here and wait until the price comes down to a discounted price that I'm comfortable with, and then and only then will I buy those shoes. And when you have that kind of discipline, not when price is here, nope, not discounted enough. Nope, not discounted enough. When it comes here, when it comes to my pocket, my comfortable zone, that is when and only when I should buy. And then guess what? And then again, just like it went 200 pips down, it'll go 200 pips back up. Because again, something else, again, from learning in the IML Academy, they teach you about measured moves. So this, again, approximately the same distance that the market travels down, there's a good chance, there's a probability that the market is going to reverse and travel back up in that same direction. And we already know, because we already talked about on the DXY is going down. So the EUR it has to go up. It has to go up. So when you start understanding some of those relationships, and this is just one relationship. Again, I focus on this relationship, and it works out for me. And I will trade EUR USD several different times, several different ways. I'm just looking, guys, for whoever might need to mute themselves. I appreciate you guys. If everybody can just take a quick look and make sure you're muted, please. Thank you very much.
All right.
Okay. Hello. Could you mute yourself, please, if you can hear me? Okay. All right. Anyways, so I think you get the point that again, we're just going to wait for it to come here, and then buy it up. Like I said, there's some nuances associated with what I'm kind of keeping it at a high level, but there are, if you're interested in all the detail, and again, it's not much, it's not hard, it's really not hard. Just again, keep it in from a conceptual standpoint that I want to buy. I want to buy at the lowest point possible, okay? And I can kind of recognize that in the market when it comes, again, these equal lows. If the market comes and establishes, this is what another little area that we look for in the market is this area here is called, where the market is basically established equal lows. Or you might, some people might refer to it as price rejection, or support, resistance, whatever you want to refer to it as. But these are the types of areas that I'm looking at where price hasn't, and that might be an easier way to look at it. If you've been training yourself in that regard, just look for those points where price has rejected from and not pushed through, and then you always go to the higher time frames just to make sure that those times hold up. Because the higher time frame, when you can validate that there is resistance, or that price rejection, I guess is more how I really like to refer to it. When there's price rejection in the same area on the higher time frames, there's a pretty strong likelihood that's going to hold up. And we can see we're all the way up on the daily, and that same price area has identifies itself as a point of price where price has rejected off of. So we can look at that and wait for price then to return to that area. If we're on the on the lower time frame, you just start looking and thinking, and using your skill set that you're developing. Sorry about the dog, guys. I'm talking about muting and my dog is breathing. But yeah, you use your skill set that you're developing in an IML Academy, and then just start thinking. Now, we have the luxury, and I suggest that for whatever period of time that you need to again, lean on those educators. Allow the educators to guide us and teach us, and use and to start practicing in your demo. And along the way, just take the trade ideas and start practicing the following how those educators develop their trade ideas. Like I said, this is just one way. There's several ways to skin this cat, so to speak. But start paying real close attention to what the educators are doing, going back and reviewing their sessions, really getting down into the detail and the minutia, and then boom, you start looking at the market, and it's like, oh, okay, yeah, I see prices I see this area where price was equal lows, or where price is rejected off of. When price, let's see, let me set an alert. And this is the other thing you just kind of learn how to do. You have to set limits and get into everything, but you can set an alert down in this area. Okay, I saw price come down here and reject it, and you grab me for a second. And again, do this weekend. Do this weekend. Grab a chart. Just grab a chart, any chart, and start looking for these areas in the market where price has rejected off of. Okay, and then follow up. Put some. If you don't know how to set alerts, you can always there's tutorials on how to set alerts on TradingView. Check them out. But again, just a quick analysis of what I would see here from just looking at this little segment of the market. Oh, wow, price is rejected in this area. Price is rejected here. So guess what? Institutional aside. So guess what? If price comes back down into this, comes back to this same area, and it doesn't push through, guess who's buying? Okay? Guess who's buying? And like I said, that's all the Fibonacci and everything else aside, okay? But guess who's buying? And so again, just start training your eyes to just look at this. I challenge each and every one of you all this weekend, between now and the market opens back up. That's a good time. The market is just still and static. You can find this kind of stuff. Use EUR USD. Look at the same thing I'm just showing you. GBP USD, USD CAD, JP, whatever. It doesn't matter. Just find 3 charts, go through them, and see if you can start identifying these types of areas where price is rejecting off of a particular area of support. Okay, I'll just keep it simple. Support, and then looking at, okay, well, what did price do after that? Did it did it run to the upside? Did it continue to was it more price action in terms of continuation to pull back and continuation pull back, continuation? Again, there's no, the market just does the same thing over and over again. You got to train your eyes with the help of the IML educators. They'll help you train your eyes to just be able to see this stuff. And like I said, I'm real careful not to say it's easy, but it gets, you start seeing it. Let me just put it like that. I don't say it gets easy. Like I got too much respect for this market to go there. But like I said, you just start seeing this stuff, and then boom, and then you just gotta trust it. And that gets into the other thing about what I said, faith. Then you gotta trust, and not jump out, and not, okay, let's just say, and I'm gonna wrap up in a second, but let's just say, okay, you trust that the market is going to come back to this area, this point of where price has been rejected. We kind of already established that. We also established that the overall trend of EUR USD is bullish. It's in a buying direction, and so we say, okay, boom. You set your alert. Price comes down here. You watch it a bit. Nope, it didn't push through. Actually, price started pushing up. I'm gonna go ahead and buy this. Okay, so you're going good. All you got your green candles. Let's make them bigger. Price is moving up. You're feeling good about it, and then boom, you get up here, and then price pulls back down. And some people say, oh, the price is going down. Let me jump out. Okay, that's your patience and your faith being tested. Okay. You've already seen, for instance, where price came from, and again, if you're studying in the academy, that there's a good chance that there's going to be what's referred to as equal moves, or where price came from, price will return to. And again, you're going in a bullish direction, so you got to give it time sometime. And guess what happens? Look what happens when you give it time. Sure, there's going to be some drawdown, some retracement. That's not even drawdown, because you got in and up here, got in the trade somewhere down here. You're just in profit. And of course, then there's some retracement, And it's gonna run people out of the market. But then guess what it did? The next leg of continuation took you up to about a 200 pip move. For real, if you position that right, you don't have to trade anymore for that week. You don't have to, if you stayed in this trade, let's say that was August 12th and got up here on August 13th at 10 p.m. and this happened, got in, let's just say around on the 12th at 2 a.m. Okay. All right, so you know, that's a day. That's a day. And just think. If, again, if you're in the signals group, how many trades you'd be in and out of for 200 pips? Versus, and I'm not saying, you know, one's better than the other, but just an alternative is, again, if you learn to identify these types of setups, and this is not even a swing, but these types of setups that are, you know, I guess, you know, intraday, I guess, you know, more so than a swing. But if you can identify these kind of setups, all you need to do is one or two of these a week. Now, maybe a little, again, depending on your account size, such like that. But, you know, again, as you're compounding your account and you get into those, you know, as you're growing your account, your lot size obviously is growing a little bit, and you take a 200 pip move, that could be a nice little chunk of profit in your account. Let's just say, you know, so some of that, like I said, this skill set and the advancement of the skill set just really takes the pressure off of trying to keep finding trades, you know, or you know, just where's the next trade, no, just manage this trade, you know. And again, I'm sorry, I'm gonna shut up right after this. But if you think about how many times I could have got into this mark, I would have got in here. Okay, let me do this real quick just to show you how profitable this could be. We'll try to give an example of how profitable this would be. So I got in. Let's say it got in down here. Let's move this arrow. Move this up just a little bit to get the top of the arrow. Okay, so like I said, we got in down here, or somewhere in this general area. So we didn't get in here. So this just got in on the base of this candle. Okay, and we got a retracement here. Okay, guess we're gonna jump back in. I'm gonna jump right back in there. I'm gonna jump right back in here. Get another retracement. I haven't ended the first trade. Okay, I haven't ended the first trade. All right, I'm gonna jump back in. Well, I guess my only other opportunity, I probably would have put in another position here, and then of course I would have cashed out here. So again, I'm in 1, 2, 3, 4 positions on one trade idea. And you have to learn, and I've talked about this before, about managing the trade. So when I say, you know, you've got in, you know, these 1, 2, 3, 4 positions, I'm moving it up so we can see it, got in 4 positions on the way to a single target, and that's not even my final target for real. But to get into to just going toward a final target. So you just think about that. And again, you're paying yourself along the way. You're taking partials along the way. You're managing your stop loss along the way. So you're constantly putting yourself in risk-free, worry-free trade situation, and it's all on one trade idea. So anyways, that's kind of what works for me. And last thing. So I talk about the educators. I talk about them ad nauseum. I know people like, you know, the guys need to shut up about the educators, but I'm not, because again, this is how you learn how to trade. And these men and women with 8, 9 years experience at this, you know, yeah, I'm gonna do exactly what they do. And people talk about they got 6-figure accounts. 6-figure account. Come on, man. These men and women, some of them got 7, 8-figure account. Think about 6 figures. I guess it could go up to $999,000. 6 figures to me is just $100,000. $100,000. I'm not trying to belittle it, but $100,000 is not a lot of money to me. So these men and women, again, have amassed multiple six-figure, accounts. So let me just show you real quick. Again, if you're new, you should be in the new members area. Okay, don't jump out in the deep water. You should be in the new members area and finding the scheduled classes that's associated with these folks right here. This is the Forex basics area. Okay, you can get a start on what I'm talking about, or any number of trading styles right here in the basics. Abel Melendez. This is what I started with. I didn't even know it was institutional trading. This guy does for institutional trade. Mike Miles does institutional trading. Jimmer does a version of institutional trading. Those are the ones I'm familiar with there. But let's talk something else. Everybody has access to the scanner, to the harmonic scanner. So let's get out of that. And this is the last thing I'm gonna show you. Last thing I'm gonna talk about. Just kind of reinforce. I know you guys know about it, but it's this section here. You want to learn how to use the harmonic scanner. And what I'm talking about in terms of institutions, you can use it with any tool. With any tool. These men are right. They're geometry and harmonics masters. So again, you want to learn how to use the harmonic scanner, and then just Now here's what my man Manny is one of my educators. Him and this guy Timmer, if you haven't been on their sessions, they combine geometry and institutional trading. It's mind blowing. It's mind blowing. And I'm more experienced with institutional trading, and I'm still learning the geometry training. I'm still learning the harmonics, but I'm seeing as I'm starting to watch them and see how they're combining those two skill sets, and it's just the results are just phenomenal. So again, but I'm not going to get that just taking signals. If you're here to become a consistent and profitable trader, again, I'm gonna say it a million times. You got to get in with these educators. So anyways, that's enough. I'm sorry if I kind of, get on my little soapbox about the educators and everything. But again, if you're here to be a consistent and profitable trader, that is the way to go. I hope some of what I shared tonight was of value. And are there any questions before I close the session out? Oh, wow. Okay. All right. I feel you. I was asked to mute my phone because the dog barking is distracting. But yeah, that's my alarm that my wife is coming home. My dog gets really excited. I get excited too. I like when my wife comes home. But yeah, I'll try to control that a little better next time. But are there any questions? Feel free to unmute yourself. If not, I will. I'm gonna put up my contact information real quick. For if you care, I can put my contact information up, and I'll share that real quick if it's of any interest to anybody. Okay, it should be on the screen in just a moment. Yep, that's me right there. Name, telephone number, IG. That's my website, savvytrader1.com. I'm on YouTube at savvytrader1. Please check it out. You can actually, there's a link on the YouTube page. There's a link. You'll find it right on the screen. You can leave your contact information and get a free ebook. Four steps to a successful first year trading Forex and digital currency, or Forex currency, Forex trading, something like that. But anyways, you can get that free ebook if you're interested. So anyways, I'm gonna stop sharing that. Feel free to reach out to me. I'll be more than happy to help you if you have any questions or need any little guidance or something like that. I'll be more than happy to help. So with that, let's see, I saw something else in the chat. Thank you. Oh, you're welcome. You're welcome. Jean, Renee, where is this recording? On the beam of this over with, where will be recording you with? Oh, yeah. I'm gonna put this on my YouTube. So this will be on the YouTube site. And that is Savvy Trader 1 on YouTube. Should be able to find it. I'll have it up, probably won't be up till tomorrow, but it will be there. So anyways, if there isn't anything else, I appreciate you guys getting on the call. I'm always humbled that anybody would take the time to listen to me kind of, ramble on, but I love this and I love to share a little bit I know about it. So with that said, you guys have a great weekend. And again, get in your charts. take my little homework assignment. Please just spend a little time with it. And just know you can't do wrong. Just stay in your demo account. Just practice. But again, just practice. You just need to see the charts. That's your homework. Look at the charts and see if you can identify some areas of price rejection, and just do some little screenshots or such. And if you want to go over it, hit me up. I'll be more than happy to take time to do it. All right, guys, I'm out. Good night, everybody. Have a great weekend.